in America. Welcome to my YouTube channel. Welcome to my YouTube channel, where we turn complete beginners into confident traders in the United States. Today, we are going to talk about how to learn stock market trading step by step in the United States. And trust me, if you watch this video till the end, your mindset about money and trading will completely change. Now, imagine this for a second. Somewhere in the United States right now, a normal person just like you is making money from their phone. Not because they are lucky, but because they understand the system. They understand trading. And the best part is, you can do the same if you learn it the right way. So let's start step by step. Step 1. Let's understand the basics of stock market trading. Now, what is stock market trading? In the simplest language, stock market trading means buying and selling shares of companies to make profit. For example, imagine you go to a fruit market and you buy apples at $1, and later you sell those apples at $2. You just made profit, right? Stock market works the same way. You buy a stock at a lower price and sell it at a higher price to make profit. But here's the mistake beginners make. They jump directly into trading without understanding the basics, and that is why they lose money. So your first goal is not to earn money. Your first goal is to understand the system clearly. Step 2. Now let's understand charts, because charts are everything in trading. If you don't understand charts, then you are not trading, you are gambling. Now think of charts like a heartbeat monitor of the market. When the price goes up, it shows buyers are strong. When the price goes down, it shows sellers are strong. For example, imagine you are watching the price of a stock, and you notice every time it comes near $100, it goes up. Again, that level is called support, which means buyers are active there. And if you see that every time price reaches $120, it comes down, that is called resistance, which means sellers are active there. So a simple beginner strategy can be buy near support and sell near resistance. This is how professionals think. They don't guess, they observe patterns. Step 3. Now let's talk about strategy. And keep this in mind, you don't need 10 strategies. You need just one simple strategy, and you need to master it. For example, let's say your strategy is whenever the price comes near support and shows a bullish candle, you will buy. And when it reaches resistance, you will sell. Now imagine this like a shopkeeper. A shopkeeper doesn't try to sell 100 products. He focuses on selling one product again and again consistently and makes profit. Trading is the same. If you try too many strategies, you will get confused and lose money. But if you follow one simple rule again and again, you will improve over time. Step 4. Now comes the most important step, paper trading. This step can literally save your money and your confidence. Paper trading means practicing trading without using real money. Now imagine you are learning to drive a car. Would you directly go to a busy highway, or would you practice first in a safe area? Of course, you will practice first. Their businesses. Trading how the global economy may evolve. You should first practice entries, exits, and if you want to understand where the money is flowing in America today. Because in the beginning, you will make at a few major asset categories. That is completely normal. That are attracting. But it is better to make mistakes in practice both institutional instead of losing real money and everyday traders. Step 5. Now, when you have practiced enough and you feel a little confident, the first major trend then you can start with small, real money. AI is maybe no longer just a technology buzzword used by Silicon Valley startups. Don't go big in the beginning because trading has quickly become one of the most powerful forces. It is a skill, and every skill takes stock market. Now, imagine you are going to the gym on day 1, build cloud computing infrastructure, and operate massive data centers, slowly build strength. Are receiving billions of dollars. Trading is exactly the same. You start small and grow slowly. Step 6. Now, let's talk about mistakes that you must avoid, because this is where most beginners fail. The first mistake is overtrading, which means taking too many trades without proper analysis. Second mistake is not using stop loss. Stop loss is like a safety belt. It protects your money if the trade goes wrong. Third mistake is following random tips from social media or friends. Remember this: nobody will take responsibility for your loss, so always trust your own analysis. And the fourth mistake is emotional trading. When you get scared, you sell early. When you get greedy, you hold too long and lose profit. So you must control your emotions because the market rewards discipline, not emotions. Step 7. Now, let's talk about mindset, because trading is not just about charts. It is about psychology. A successful trader is not someone who wins every trade. A successful trader is someone who manages losses smartly and stays consistent. Now, imagine two people. One loses a trade and quits trading completely, and the other one learns from the mistake and improves. Who do you think will succeed? Of course, the second one. So always remember. That's all for now. The next